Hey, what's up, traders? My name is Brian. I'm a professional trader with BK Trading Academy. And today's video, we're going to just talk about EURJPY. That's the euro dollar versus the Japanese yen. And it's just an update from a video that I posted 2 weeks ago as to what I wanted to predict price was going to happen based on the commitment of traders report and price action. And I also wanted to make an update for my friend right here at Venture Investment Portal on my previous YouTube who said, hey, any updates on this trade? I've been watching this pair for the past 2 days and it still looks pretty bullish. Well, like I said, patience is key when it comes to big gains in swing trading. Let's go ahead and get into it. All right, guys, so we're looking at EURJPY and I'm on the daily time frame. Now, at the time of me dropping the video, it could have been September 14th or 15th. I mentioned that we may see some downside movement based on the commitment of traders report. If you're unfamiliar with the commitment of traders report, it is a weekly publication from the US government of stating to us as traders how many longs and how many shorts they're entering in the market, the big banks and institutions, right? It's kind of a shortcut or a cheap method to determine if we should be buying or selling. Now, this is specific to swing traders. Although you can use this for day trading, this is highly recommended for swing trading. Now, to me, swing trading is where the money is at because you get to collect big moves. It just requires patience. That being said, at this time, price looked similar to this. And what I was doing, I was showing you that price was currently at this white candle right here. And if we look left, because I'm a price action trader, I like to look to see where price rejected before. This was here July of 2025. So let's go ahead and mark that. And then at the time, this was around September 15th or September 16th. So let's go ahead and mark this. And I'm going to change this to July 28th. All right, now before we start here, I'm not selling just because price is here. I was showing you that the commitment of traders at that time was showing that EURJPY, that the big banks and institutions had a sell at around 12,300 sales. So they entered a lot of short orders. And we did see some sort of movement to the downside shortly after, which was this zone here, but price began to push up into the zone. So we never want to buy just because of price action. However, what I like to do is go out to the higher time frame because I want to see where am I at? Where's this at amongst the noise or the big time frame? So I'm going to go to the weekly time frame. And one thing that I've noticed, let's go ahead and move this out, is that we have price here all the way back in July 2024. Let's go ahead and put that here because I don't want you to forget that this is considered a supply level. Now, typically when you see a huge imbalance like this, and when I say imbalance between buyers and sellers, last time when price was here, if price goes back to that location or around this zone, 9 times out of 10, we're going to see a downside movement like this, just like it did when we first got here back in July. Now, there are two things that I like to look for when I see this huge imbalance to say, you know what, not only am I going to be short selling if price gets back to that zone, I'm going to be holding for a possible trend reversal. One, the wider the gap or the further the distance, meaning that when price gets back to the zone, the deeper the drop. That is number one. The further the distance, the deeper the drop. So notice how wide this is. This is considered our B swing strategy, guys. If you're not familiar with B swing, this is a swing trading strategy that is designed for maximum profit. So again, remember July 2024, let's fast forward to September 16th. We're not quite there on September 16th, but we are there currently as of October 2nd of this video, or in October. But we'll fast forward this video. This is a replay mode for now. So we have over a year gap here. So this is our supply level here. If you're taking notes, feel free to do so now because oftentimes people get confused of supply and demand. That's number one. Number two, the longer or the deeper the trend reversal, the further the drop as well. Okay, that is probably one of the most important. So the wider the gap, odds are we're going to drop at that zone. But the deeper the drop from the initial push, the deeper the drop it will be here. Now, it may not be as deep as it was initially, but you can almost bet that at least a third or at least a half of the way of the drop, and that can take weeks and months to come. So oftentimes, this is what actually helped me retire my 9-to-5 job, was just trading setups like this. This to me is the easiest way that you can trade, is just only trading setups like this. There's a pro and there's cons. The pro is you will rack up really good. The con is you have to have patience and that this doesn't happen too often. But the pro is you have a lot of pairs that you can be trading that is set up like this, not just supply zones, but even demand zones. Notice here, the same thing, guys. Last time price was at this level here was in August 2024. Look how high price went. Now, the gap and the difference is not that wide. This was September 2024. So August to September, 1 month. But because of the steepness of this trend here, we can almost say that price is going to go at least 3/4 of the way, but it went even further. Guess what? Price came back down, not quite, but when it came back down at this zone, now I can see we had a touch here, one in August 2024, September 2024, and now here we are, February 2025. It didn't get any lower, so this is where I will be buying long term. Now, when I say long term, I don't mean to put in one trade and then hold it for a long time. You're going to get swap fees, you're going to get commissions. Oftentimes, what we teach is that you put in several positions and then you partially pay yourself while you're holding runners. As it goes up, pay yourself. You can enter more trades. As it goes up some more, exit some more and pay yourself, so on and so forth. And look what happened here. You had a huge trend reversal. Same thing, guys. I told you this before this even happened in September. Let's go ahead and fast forward here. Again, guys, I'm going to exit the replay. And this is where we're at now, the exact same level as we were back in July 2024. And look at this weekly candle here, aggressive. Just to give you a perspective, if I get my measuring tool from the top to here, that is 270, almost 70 pips, 270 pips or so, okay? And we're going to continue to drop. Now, if it's going to drop the way these white candles rose, I'm not sure. However, you don't want to get in now. We never chase the trade. Price typically move in waves. You usually have an impulse move, correction, impulse move, correction, and so on and so forth. Now, it could get all the way back to this bottom, and if so, it may take a while. But remember, you pay yourself, you typically pay yourself right before the correction. You can add more trades here, drop, pay yourself right here, correction. Now, you oftentimes will look left for clues to figure out when the correction is happening. So the correction, in my opinion, is going to be happening sometime soon. I'm looking at possible wick rejection. Let's go to the daily and I'll show you. Look at the wick rejection here. When we climbed here, pull back. We may see a correction here. The next correction may be around these zones. So I like to look at something that I call pivot points. You can look at them as wicks or aggressive, or when you see consolidation, when price comes back at these levels multiple times, those are my pivot points. Here's another pivot point where we may have another correction, but we should see a reversal, and the yen is highly, highly oversold. Now, one thing we must keep in mind is the interest rates of the yen. It's one of the lowest in the entire world. So high impact news could completely obliterate our analysis. But for now, price action is definitely being respected. So if you're just missing the trade and you didn't see my video couple weeks ago, I wouldn't get in now. You want to get in at a pullback. You need a discount because typically a pullback is attracting more sellers. This is where I will look to go ahead and sell. And if you don't know the numbers, you can go ahead and take a screenshot right here. But I would love for you to learn how to find these pivot points in price action. Again, guys, this here is golden. Finding supply zones, finding your demand zones here. This will be our demand level right here. And guys, I can't stress this enough. Swing trading is where the money is at, especially if you can spot a trend reversal way before it happens by simply finding supply levels. Remember, the distance, the gap matters, and the drop matters from when the gap initially started matters. The further the drop is going to be when it returns. The wider the gap, the higher the possibility that you're going to see a rejection. Now, this is where a lot of people get confused. Let's say back in 2024, there was a drop and it only dropped here, as far as here, and it continued to rise, okay? And it did something like this. Now we're back here. Because this drop here wasn't that large, but the distance was great, we can see a possible drop, but it may not be as large as this one. I would only trade it about a third or halfway to about right here. And even from there would be about a good 100 to 200 pips. That's easily 200 pips. But the best setups, guys, for the longer drop is the initial drop from when price was last here, and then it comes back to return. Now, I know my chart looks a hot mess, but that's completely fine. I want to try to make a point. Guys, right now, if you haven't subscribed to the channel, feel free to subscribe right now, thumbs up, and let me know in the comments if this makes sense to you or if you're completely lost. I want to make sure that I respond to you if you're lost so I can help you out. Now, the key thing is you have to go to the higher time frame in order to find all of this out. You have to go to the higher time frame or simply spread your chart out, okay? I'm on the daily time frame. When I first started, I was only looking at this zone here. So I can scroll my mouse out, pull this down, and I can still see these wide zones here. just like this, okay? Or if I was only focusing on this area here, I can just simply click the weekly time frame and it does that. And I can scroll down just to kind of get a good picture. So oftentimes, guys, your analysis isn't correct because you don't understand how to scroll and fit your chart out to see the bigger picture. That's number one. That's usually half the battle. Once you can find that out and scroll your chart out perfectly to see certain patterns, like I can see that this was an uptrend previously, and then we dropped significantly. And we happen to drop right here from where price pivoted before. Remember, price dropped here in the past, but remember, this is where we pivoted at. I like to call these pivots. This is our new demand because look how high it rose. So if I see it stop and peak here, I know in the future, I'm going to look for that zone if it drops significantly here. Now, as it's dropping, before it even gets here, I'm looking at this level right here. I'm looking at to buy at this level because this is where the trend initiated at. All right. So I'm looking to buy here about at least a third or halfway of the initial push to the upside. So I would have bought at least a third way up from here to maybe around here or halfway. Remember, and it did just that. Now, as in the future, let's say I don't know what's going to happen. As it comes back to this zone here, guess what? I'm buying again. Why am I buying? Because this initial area right here, back in December 2023, it came to retest this again in August 2024, and then coincidentally again here in February 2025. As I see price rise, now let's fast forward. As I see price rise to this zone again, it's on my radar because I see there was a pivot and a downtrend that started right here in July 2024. That's where I'm putting my sell at. This is all what I did when I was working a 9-to-5 job, and it was the easiest setup, and it helped me to retire. The easiest way to trade. Guys, again, let me know in the comments if this makes sense here. I think that we are headed in a downtrend here. Trade this about a third of the way if you want to be safe to around this zone, 1.67-ish. Halfway if you want to be a little bit more riskier to about to around 165-ish. All right, guys, I hope to see you in the next video. Give me a thumbs up if this makes sense. And guys, remember, if you're interested in our Trade from Scratch program that's going to be starting November 4th, I suggest you sign up now because it is heavily discounted until October 4th. God bless you.